Hey guys, I want to welcome you to the weekly Wednesday for the Financial Freedom newsletter, where every week, every Wednesday, we delve into something inspirational, motivational, something excerpt taken from the Financial Freedom weekly newsletter. Wherever you are, if you're listening on Spotify, on iTunes, Google, be sure to click the like, subscribe, share, comment. And without ado, let's get into the show. Welcome everybody to this week's podcast episode for the Financial Freedom for Physicians podcast. I'm your host, Dr. Christopher Liu. And as you know, I talk about 4 different types of freedom: time, financial, location, health freedom. And today it's going to be all about real estate with Jennings Smith. He's going to talk to us about the state of the market, his deals, and we'll go from there. So Jennings, welcome.
Hey, thanks for having me, Chris. I appreciate it.
Yeah, I know you have, doctors, real estate, very interesting. Tell us more about yourself, your company, how you got started.
Yeah, I'm based out of South Carolina, and I was a contractor for many years, about 15 years. I was building custom houses and doing bathroom and kitchen renovations, that sort of thing. Yeah, I saw that I was kind of on this treadmill of kill and eat, get the next job, and I was very subject to market cycles, right? You know, as a contractor, you see economic downturn, and they can really hurt your business quickly. The medical community is pretty insulated from economic downturns, but that's something that I definitely dealt with a lot. And so I started to, about 7 or 8 years ago, I bought my rental property, and it was a mobile home. So I just started with like a $5,000 trailer. I fixed it up. I placed a renter in it, and he immediately destroyed the property. Dogs tore it up, and I almost quit at that point. Trial by fire, being a landlord. But I persevered, and I bought a couple more trailers. Then I bought my first rental home, and then one more rental home, and I realized I'm not making enough income for this to go quickly. This is going to take me forever. Because if you've ever owned rental homes, they only make you a few $100s a month in income, and that's if it's doing well. And usually you have to roll that back into the roof or the HVAC or something at some point. So I started to set my sights on commercial real estate, multifamily and self-storage, and that was attractive to me because it was very recession resistant. People had to have a place to live, and it also, I could scale it a lot easier than trying to own 1,000 trailers or 1,000 single family homes. But a lot of people own 1,000 apartments or more than 1,000 apartments. And so about 3.5 years ago, I set my sights on that and closed my first 12 unit and took it from there to where we are now. We got a $60 million portfolio with about 1,000 apartments and 500 self-storage units. And I'm quit being a contractor. I sold my company, and I'm much happier doing this now.
Yeah, well, that's a very inspiring story. And what's interesting is, we're talking about scalability and being a landlord. And like I said, one of my guests who was also in real estate, he said, landlord is tenants, toilets, and trash. So, but it's interesting. So one thing is, what do you think made you successful? Like, was it a mindset shift? Was it a strategy? Tell us more.
Yeah, I saw that most of my net worth was tied up in the real estate, right? It was my own personal home and a couple rentals that I had. That was really what I was able to save and invest, because real estate is a great way to force yourself to invest. You're paying that mortgage every month. You're banking that money. It's a long-term game, but a lot of people have a difficulty setting aside, 20, 30, whatever percent of their income and saving it every month, because, we've all got bills and we've got lifestyle, and especially if you're just barely paying your bills. And so this was a way that I saw to utilize other people's money and make them money while building net worth and wealth for myself, because there's a whole nother side of people that have the problem of they've got too much cash and they want to put their money to work, and they need the tax shelters that real estate provides. And if I can connect those people with my expertise and I can become really good at finding deals and doing the value add, and I had a renovation background, then I could make money for everybody. And so I think it was a mindset shift of I can do this, right? I can convince people to let me build their home. I can convince people to let me renovate. I can buy a rental home. Why can't I buy a 12 unit? And if I can buy a 12 unit, why can't I buy a 200 unit? It's really not that much more difficult, or it's just bigger numbers.
Interesting. Yeah. It's it's quite interesting because it's like the contract is there. It's just the deal has to be put together. So we'll talk about. So really, one thing I get from clients is the state of the market. Is this the time to be investing in real estate? Like, what are your thoughts?
Yeah, that's a great question, and I think that we've got to take a look in the rearview mirror. And I think a lot of people have PTSD about 2008, 9, 10, myself included. I mean, that was a rough time for me as a builder. But, one is this the same scenario that we're facing? I think that that's really what they compare it to for the most part. And I don't know that that's accurate. And then secondly is, when we were in 2008 and 9 and 10, looking back, it's like, oh, well, why didn't I buy more real estate? It was so cheap. And yet when you were in it, everyone was afraid and nobody was buying, right? That's why prices were so low, because nobody was buying or could buy at the time. And so I think there's a lot of people that are sitting on the sidelines saying, well, there's a huge crash coming. Interest rates are going to go to, 10, 12, 14%. The dollar is going to spiral out of control. We are heading for a cliff, and that's when I'm going to buy. I think that's wrong. I think that's a mistake. And I think that the people that do that, they were saying that in 2018 too, 19, when the market's, it's too hot. Then it got really hot in 2021 and 2022 even. Now it's too hot to buy. Well, now it's too cold. There's always a reason not to buy. And my thought is, I've got really, really strict criteria, very strict criteria. And I do see a lot of bad deals out there. I see a lot of bad syndications. I see a lot of apartment deals that never should have been bought at that price. The nice thing about it is real estate's pretty forgiving. If you have a long time horizon, you're usually going to be okay. You maybe don't make the best returns, but you didn't lose the capital, which is first and foremost. And so the real danger right now is overpaying and getting into short-term debt that you have to refinance quickly. So people that got into a 2-year bridge loan, a year or two ago, 5-6%, now they're looking at refinancing into stabilized debt at 7 to 8%. I mean, they're in trouble. Their debt service coverage doesn't cover, and they maybe don't have the option to extend. And I think there's going to be some of that where there'll be deals to be had because of those people that are in that scenario. But I think by and large, most commercial real estate investors are going to find a way to figure it out. They'll extend their loan. They're not going to sell super cheap. And we're looking at 97% of single family homeowners refinance their home in the last 3 years at 3%, 4%, at a 30-year fixed term. Like, why would they sell right now? Why would they jump into a 7%, 8% mortgage and sell unless they just had to, right? There's people that have to move, but by and large, I'm not going to do that. And in 2008, 9, and 10, they never could have qualified for the loan. They got given a loan they shouldn't have been given. They didn't put any money down. They thought the market was going to keep going up and they'd sell it in 6 months or a year and make a bucket of money or refinance again or whatever. And the tide went out. Now their payments are fluctuating payment. Payment went through the roof. They never could afford it anyways. They don't have any equity. They walk. That's not the scenario that we're looking at today. Like, maybe you don't have much equity because the value went down, but you're in a 30-year, 3.5% fixed rate mortgage. You're not going to abandon your home and go try and find something that's a rental at a higher monthly rate. That makes no sense. So I don't think we're going to fall off the cliff. I think it's a time to be cautious, and I think it's time to buy stuff that fits your parameters with long-term fixed debt, and then refinance, right? Refinance it in 2-3 years when the rates come back down.
Yeah. Interesting. Yeah, it's all about risk, and then make sure your cash flows can service the debt. Who knows if we're in the top? Like, yeah, I talk to so many people, they can't even understand what's going on, and just they've never seen this type of the market like this. Yeah. So tell us more about. I know you have What does your company do?
Well, yeah, let me give you an example. I mean, we just bought a deal 2 weeks ago, and we just closed, or maybe 3 weeks ago on Monday, and it was a 34 unit, and we got it for $1.2 million, 5% interest, seller financed, 70% leverage, 30% down, 6-year fixed term, new roofs, new parking lots, 100% full, and like $200 under market rents at, $45,000 a door, and I can rent those for $750 a month. There's no way that I'm not buying that because, the economy's not good, right? That makes no sense. It fits my boxes, all of them, in droves, and I'm going to close that deal and continue to build my portfolio. I bought another self-storage deal, 300 units for $1.5 million in spring of 2021, because it's a home run deal. Now, will I have trouble refinancing it? Yeah, probably so, but I've still made that thing worth $2.8 million. So if I need to sell it, or if I need to refinance it at lower leverage, I'm still going to be fine. And if you just keep picking those diamonds in the rough, then you're going to be super glad because imagine, just take yourself out into the future. Imagine this fall, winter 2023, when the Fed starts to lower rates, right? And they start to say, we got a handle on inflation, and the stock market's going crazy, and the crypto markets are going crazy, and the rates are falling, and real estate prices are back. Like, you are going to look pretty brilliant if you've stayed the course and hung on through this.
Yeah, it's quite interesting. So it's quite, really, it's all about timing and getting in when the opportunity during bear markets. I know a lot of people are interested in following you. I know you're on social media, you have a YouTube channel. And how can they follow you? I know you've been on some other guests as well, so let us know how they can follow you.
Yeah, I mean, my main value add, my podcast is pretty much mindset based on helping people that are, maybe they're stuck doing something that they don't love. They want to pursue a passion. They want to generate more passive income or spend more time with their family, etc. And that's kind of what that's based around. It's not just real estate and multifamily, but I also teach people who want to do this as a living, right? They've got a couple rental homes, maybe they're flipping houses and they're tired of that transactional stuff. And they want to know, how do I buy an 18 unit? How do I buy a 30 unit? I don't have millions of dollars. I can't qualify for these loans. How do you plug into that network where you can find the deals and get somebody to help you qualify for the loan and connect with investors that are going to partner with you for the down payment? So that's, I built a Facebook community to initially to help me find deals. Like, I wanted to tell people what I do, so they'd bring me deals. And that's kind of grown into helping people do this as a living because I'm passionate, because it changed my life. I mean, I went from, barely scraping by, barely making six figures to and I got 4 kids and a wife, that $100,000 doesn't go too far, to, completely turning things around. And I want to share that, show people how we did that.
Yeah. And I know you're at Live Oak Rental Properties, and for all the listeners out there, Jennings resources will be in the links and show notes. And it looks like he's built a gauge following of over 58,000 across all platforms. His podcast gets over 2,000 downloads a week. Be sure to check those out. And so Jennings, it was a really fascinating discussion, some really interesting insights, and we'll be sure to direct the listeners over to your resources. So thanks so much, and it's great to have you on the show.
Awesome. Thank you, Chris.
I hope you really enjoyed that wonderful, inspirational, motivational piece. Again, wherever you are listening, if you liked it, be sure to like, comment, share, subscribe. We're on everywhere. Spotify, iTunes, Google, Amazon, Audible. And without much ado, be sure to thank this show's sponsors, and we'll see you next week.